In this presentation, we will record transactions related to raw materials that are used and applied to jobs within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice file 2. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. We're first going to consider our objective in our Excel worksheet. So we're going to be putting that green item on the item that we are on. We're on the second tab, 1.7, and we're going to be recording this transaction. The data is on the left. Direct material transferred from raw materials to a job. So 14, 15, and 16. So in other words, we're taking the materials out of the raw materials, transferring them to the jobs, which means we need to record them on the job sheets. Now, in a prior problem, that meant that we were going to take it out of there and put it into the work in process, then take it from the work in process to the finished goods, then finally from finished goods to cost of goods sold at the point of completion. At this point in time, what we're going to do is kind of simplify that process in some ways and just take it directly to cost of goods sold and skip this transferring process between the two. What that'll mean is there's going to be kind of a timing difference because we are in essence recording the cost of goods sold not at the end point of the completion of the job, but basically when they're incurred. So that means that this job sheet won't tie out to the work in process, but we could still basically tie it out to the cost of goods sold. This will result that in the end of the time period, adjusting entries related to tax adjustments or related to if we want something on the accrual basis or completed contract or percentage of completion, but any method we have will probably result in that. So the goal here is to put together a method that works for us and then allow those adjusting entries to happen at the end of the time period by our CPA firm, tax preparer, or ourselves as needed. And so this is another method that basically can be used. We'll see how these things will tie out for it. So let's take a look at what will happen. We're going to say cost of goods sold then. We're going to take it to cost of goods sold. That's what's different. That's why it's orange. That's going to indicate what's different from this time to the last problem. We're going to go to cost of goods sold, which is an income statement, a temporary account, which will close out to the equity at the end of the process. Then we're going to go to the raw materials. Raw materials is going to be going down. So raw materials decreases, cost of goods sold, and expense goes up, bringing net income down. We're now at a loss of the 350. And again, there's a timing difference. So until the job is closed, this net income doesn't really tie out because we're recording all the costs and not the revenue on it. So just keep that in mind. It's a timing difference. Then we're going to record this in the job sheets. We're going to record it at 100, 170, and 80. So if I go back over here, we're going to say we got the 100 for job 14 and then 170 for job 15. I'm in the materials section, 170. And then the last one was, what was the last one? 80,000. So 80,000 here. So we'll say 80,000 in the materials in job 16. So if I was to say this one, I'm holding down control, this and this, that adds up to the 350,000, which is our adjustment. So that ties out to the adjustment we made to the cost of goods sold account. So then we can think about, well, how does this cost of goods sold account tie out to what we have on a trial balance? We know that we put it to cost of goods sold, but that closes out, and we also have this beginning balance. So how would we tie these things out under this method? We want to basically know how the job cost sheet will tie out to the amounts on the trial balance. Well, we can see on the trial balance, on the job cost sheets, we have the sum of these open jobs, the 3 jobs, adding up to 433,000. That's different than what's in cost of goods sold by the 350. That difference is due to the beginning balances. So if I was to take into account the beginning balances here, those items which on the trial balance rolled into the equity or capital section, then we're going to be in balance. So that's the kind of adjustment that we would need to make. And we'll see that again at the end of the period. I'll talk about that adjusting entry. But you can see as long as we can tie out, then we feel fairly secure. We feel pretty good that everything's okay. It's just a timing difference that we can then adjust for and make an adjusting entry periodically at the end of the month or year if necessary. Okay, so let's enter this now into the QuickBooks system. We're going to basically enter this transaction. Our objective is to get the GL accounts correct and then also to apply them to the job. and also track inventory because we're dealing with this inventory items that we're tracking in QuickBooks. Now, because we're doing that tracking of inventory, we got to use this form again. We're going to use that create sales receipt form. We're going to use the same kind of thing. This is, to us, an internal document. We're not using this to bill the client or invoice the client or bill the client. We're using the invoice to do that. This is going to be used simply for the second half of the transaction, transferring from raw materials to the job. So if I select this, then we get our sales receipt, which we changed the name to an internal use only. And then we're going to enter in here. We're going to say this is number 14. I'm not going to apply this. And we're going to say this is as of the date of the 7th now. So I'm going to say this is the 7th. And we'll tab through here. And we're going to say that we have materials. And now we have to see how much per job. So the materials are at 1,000. So if I go to the jobs, we applied the 100,000 here. So I'm going to put 100 in the quantity, 100. And then it looks like this sheet's not doing anything, but it is. Because remember what this does is if it's a sales receipt, it would increase undeposited funds, increase sales. We're not doing anything there because we didn't enter a rate. Therefore, it has no amount for that side of the transaction. The other side would be to reduce the inventory and record cost of goods sold. That's all we want it to do. And that's what it's going to do here because we gave it the quantity and it knows the cost. How does it know the cost? Because it's under the lists, item list. We set up our materials item to be $1,000. So $1,000 times that 100 will give us the 100,000. So there we have it. And we're going to say save and new. And let's do it again. And we're going to do this for job number 15. Same concept. We're not going to be applying this out. We're going to be saying this is going to be the direct materials. And the quantity then is going to be, we want 170,000. So you can actually do the math in here. You can say, I want 170,000 divided by 1,000. And that's going to be 170, right? And that'll give us 170,000 quantity. Nothing on the rate, no amount here. We're going to say save and new one more time. Job number 16 now. Job 16, tabbing through this, same kind of process. It's going to be the direct materials. And we're going to put under the direct materials the amount of 80,000. So I'm going to say this is going to be quantity 80,000 divided by 1,000 is going to be 80. And that's going to be the amount that's going to be recorded. So let's say if this does what we would expect it to do. Let's say save and close. See if it does what we hoped it would do. And say yes. And then we're going to go to the reports drop down. We're going to go to the accounting and taxes and trial balance. Within the trial balance, we're going to change the dates from 01/01/20 to 12/31/20. And there we have it. So here then, we're going to say that the inventory is now at 50,000. Double clicking on the inventory, we see the 400,000 being decreased by 100, the 170, and the 80. That's what we want. Double clicking on that, we see our transactions, internal use only. If I close this back out, other side in cost of goods sold. Double clicking on the cost of goods sold, we've got the 350,000 total. That looks good. Double clicking on any of these items, we got the sales receipt that we renamed to the internal use only. Closing those back out. So that looks good. Let's then look at our job sheets. We're going to go to the reports up top. We're going to go to the job time mileage. And we're going to go down to our job estimate versus actual summary sheet. There is nothing there. And note, there's nothing there because we haven't put an estimate. And this is kind of something that's a little bit funny within QuickBooks. It would be nice if it would still give you the costs without the estimates. So what we're going to do next time is we'll enter the estimates and then the costs should appear as well. So next time we'll enter the estimates, we'll come back to this report. I'm going to close this back out. Then we're going to take a look at the inventory. The inventory is at the 50,000 now. We're tracking that. So if we go to the reports up top, we go down to the inventory reports and the inventory valuation summary, and we could check out the inventory as of 12/31/20, and there is our inventory currently at the average cost 1,000. We have the asset value is the 50,000 at 50 units. So 1,000 times the 50 is the 50,000. That amount matching what is on the trial balance, back to the trial balance, under the inventory asset. Next time, what we're going to do is enter those estimates so we can finalize basically the reports. Going back to Excel, we want to get this job cost report to tie out to QuickBooks. To do that, we're going to be putting in the estimates next time.